Welcome to TradeTheNBI.com. This is John. This reports for the 12th of July, and well, volatility promised it, and here it is, continuing. Whether it's gigantic moves to the upside. Here you had the big 60 plus move to the upside, then 70 to the downside, all within a couple of days, and just an indication that the market's getting more skittish. They're just not convinced about the direction of things. And while it's all bullish in general terms, this wasn't out of control. I mean, obviously, we'd seen the positive extremes and we talked about it. Typically, though, after a big jump day like that, you usually get anywhere from a third to a half fill. It continued. And some of that is related to the anticipation of the Biden presser, and then what the Fed's doing with the numbers, suggesting that when you hear them talk about how inflation is so near their target, and you're just like, it's not even credible. Nobody believes it, and that they're still working their case towards a rate cut. The ultimate reality is that if that happens, that inflation is just going to skyrocket again. We're already at unheard of valuations, at least from an earnings standpoint. And while we talked about that, that's not necessarily problematic when you're talking about the debasement of the value of the currency. It's an interesting setup. But now, when you look at it from our daily standpoint, fine, we're getting our move closer towards DOC spread here on Nasdaq. But again, steel dipping down below, and of course, when it's in the negative 13, it's the equivalent of it coming from the top, which is negative. But as soon as it pops back above negative 13, you're going to shoot back up. So this may last enough to fill in some more positive extremes. Of course, with the Nasdaq, we filled in almost back to the mean, but we've got a little bit further to go for that to be a final. And that would just take you to the 76%. We're not talking doomsday, while everyone was saying, what a horrific situation. No, it's relatively normal. Because again, with the option plays that are taking place, all those call buyers pretty much wiped out and put buyers too late to the scene to make any difference. And then they're going to get reversed on the turnaround when some money gets applied. And of course, Treasury's continuing to lower their yield. Bizarre in an environment. And what did I tell you was going to happen with that? That means that, like happened in the early 70s, gold is going to skyrocket despite rising interest rates, which you would think that that would compel people into treasuries. No, it didn't have that effect, because at the end of the day, we can all see that inflation is running far hotter than that, and clearly reflected with oil prices, and in turn that's going to translate to gold. Now you're telling me that inflation isn't going to be moving in an upward trajectory when oil prices are at these levels. It's just stupidity, and that's fine. The market does that periodically, and you just go with it. But we ultimately know the broader situation, and the timing of that isn't that hard to see, because the readings will pretty much indicate it. But you get these wild moves like the euro climbing based on what? Nothing. The reality is the euro is way overvalued given where the situation is. But if you see the U.S. economy potentially having a hiccup, so to speak, with unemployment rising, and particularly all the new job creation is just coming from that massive flood of immigration coming into the U.S., designed to help reduce, wages, but more importantly, it's really designed to bring in a bunch of new voters, particularly where you have individual states that aren't stopping. And of course, it's interesting enough that you watched, they had the Secure Act or whatever it was called, that was saying that you have to be a citizen and actually show an ID to vote, and of course that got killed in the Senate yesterday. And individual state like Wisconsin Supreme Court saying that you can't require, you can have ballot boxes that just aren't even watched, and that, and these are situations ripe for fraud, which we've already seen. I mean, that's not a question. But look at that move from gold. That's not an accidental. This is nothing surprising to us. We've been talking about it for a while. It's going to continue. Yeah, there'll be fits and starts with it, but at the end of the day, there's nowhere else for gold to go but higher, given the scenario and how things are, and the record deficits. I mean, you're looking at just in the last months, the interest expense is just staggering, not sustainable, and everybody knows it. The question is, how do you resolve it? How do you get out of it? There are no good answers to that. Didn't translate to Bitcoin or cryptocurrencies at this particular stage because, of course, they have separate issues. Bitcoin's dealing with the Mt. Gox supply issues that are flooding into it. ETH still within its regulatory considerations, but they'll explode later on too, particularly as things become unhinged within the market. Now, is that a guarantee that it's going to happen right away? No, because at the end of the day, we look at our situation. Excuse me, did that again. We have down here positive extremes beginning right about here, and another set of them that take us all the way back to the original breakout. And what did we do? We filled the positive extremes. Big surprise. It exited out of the long situation a little bit later than I would like. Still working now, but this one was a bit tougher because, again, you still had the steel coming from below, but it stayed below the negative 13 during all of this breakdown. And that, of course, suggests weakness. So it's like one of those where I sell out when I see that breaking down below, and then it's just a matter of waiting for your break back above. And it's not hard to put your line across there to say, okay, buy back above, otherwise remain short. And in this case, that is exactly correct. And even from the automation of it, it knew to continue that short, and of course followed it all the way down. So clean, simple, to the point, but healthy from the standpoint of filled those. But and don't forget, we still have positive extremes going all the way back over here down to your 55, 86 now in really negative situation, bad news kind of construct. Yeah, you're going to fill those pretty quick as well. It may take a little bit longer from a daily standpoint, but eventually they'll get filled. It's going to happen. Here we go from our 5 minute chart. It was ridiculous. So in the early morning, you get the massive spike as we broke into the actual cash open. You had a little enthusiasm and all those call buyers thinking they're going to make an absolute killing on everything for the week, and then boom, they just dropped the whole floor. So everybody bought from the original breakout that they were at these huge gains, got wiped out pretty darn quick. The smart ones got out, obviously, in time. And you can see from a post-market standpoint, not a whole lot of excitement or juice here at the start of the European session. It's just a mild back and forth. So there you have it. I mean, the promise of volatility is here, and it's going to continue. So don't be surprised by it, and don't be afraid of it, because certainly it gives great opportunities for outside gains within times where people get scared. And when people get scared, it's not the time to reduce position. I actually think it's always time to increase position, because we clearly know what's happening with it. So that's always been my approach to it. Hope that you follow that one as well. As always, though, anything relevant, I'll put it on the Skype chat. Have a good one. Trade well.